Great and beautiful morning to you, wherever you are joining me at this hour. Welcome to 252 edition of Investdata Trading Academy live with Ambrose. Yes, I would say that the global market again has opened the week on a mixed sentiment, but we are seeing that most of the market have rebounded, opening higher for today. Especially we saw that in Asia market where the market was flat, but we can see that China inch up this morning after they retain their own interest rate flat at 2.7. Then also at the same time other markets in that domain are flat. But if you look at what is happening in matured market like US and also uh, European market, I will tell you that investors sentiment is also equally mixed. But the good thing is that the corporate earnings in that environment are coming up powerfully, especially the big names in the financial sector, the banks that released results on Friday, that have changed the mood of the market. Despite statement coming from the Fed that they might likely also hike rate, in their coming policy meeting May 3rd. But because of the result, we're seeing that the market also may but open higher compared to what we saw last week. It's a good one. Also, the same trend is what we're seeing in Europe as we speak now. It tells you that also investors in that domain also are looking at this figure as all eyes are all these central banks policy meeting that is coming up in what coming up in May for all of them for have both central bank European central bank which is ECB, Bank of England, all their meetings are scheduled what in the month of May. That means between now and May, there's less economic data apart from all eyes in also in Asia market where China GDP is expected to hit the market tomorrow Tuesday. These are the things that is shaping the market, and also oil price are also reacting to that expected Chinese economic data, especially GDP. That will be how we want to see how the economy has fared for the first quarter of the year. These are what is shaping the market as we speak at this hour, and investors are not sleeping. All eyes on what where can we move, where can we take steps. These are the things that also leading the market in this mid-trend, as I said earlier. Most of them open flat are waiting what more of the corporate earnings report to hit the market. This is what is shaping the market. For me, there's no cause for alarm, but as investor or trader any day, anywhere, no matter the instrument you are trading, it is very, very important that you understand the market sentiment and the direction where it's flowing so that it will guide your work, it will guide your investment decision. But to speak now, we know what happened in the month of March when the banking crisis hit those mature market. And since then, I will tell you that the market in March, since March in those mature market have been looking what southward, but we are seeing a kind of a stable stable like a side trending trying to open up to break out to start looking up again. If the numbers were expecting come otherwise and it beat market expectation, because we are seeing that the impact of 1 year rate hike in US has not helped the economy. Rather, it has ushered the economy into a kind of a minimum or in kind of a mid recession, which most of the investors there are not happy. For that, most of their funds are leaving forward for other instruments. That's why I can see that gold price has gone up. You can see also what is happening Bitcoin market and all those stuff, Bitcoin market, because of what when you see an economy going into recession, it's going to reflect on the on the companies instead on that company because the economy the market is not operating outside the economy. When there's recession, I tell you, naturally there's what there's contraction, low demand for goods and service because of what high cost of funds and people disposable income are not much to drive what economic growth. But good that all eyes are on what on the coming edition of Fed on the May 3rd, 2023. These are the things that will shape the market. As we speak now, that's why all eyes are what on the banking result. And good that the one that came on Friday came to beat market expectation more than what higher than expected, which is a good one. Now our eyes are seeing how more will come today and during the week so that they can also analyze this matured banks that are coming, and how stable will the result be, because this is all eyes and what on this result. These are what's going to shape the market going toward into the future. But as investors also are focusing on how they can also see that most of the consumer companies or consumer focused companies are likely to be affected with this rate hike as the economy is slowing down and high inflation. That is going to also affect those companies. For that, that's why investors are looking at how to reposition their portfolio toward the sectors where they expect that the high interest rate and also inflation will not affect more. Like I told you earlier, that that the the China economy movement or data expected has already kind of impacting on the oil market. We saw that oil has been resilient in terms of price all this while. Last week, after touching as low as a 15 months high, it came up and remained a bit stable. But with this expected figure from China after saying that the rate they maintain their rate or their interest rate there, but looking out to see the outcome of what the performance of the economy after they have lifted their zero COVID-19 restriction. Which sector has enjoyed this lifting? Which sector are still lacking behind? These are the things that is shaping all this market as we speak now. Don't forget that I will say that when US market sneeze, other market catch a cold, especially when economic data from that environment comes no below expectation above it. The market know how to react to it globally. But it's good that the inflation figure from that domain US was still looking down, even when EU, the European zone, we saw it slow down. But US has said, Fed has said, even it's slowing down, inflation and and positive labor report that they still want to hike rate because of what they are still looking at. Inflation is about almost 40 years high. That they are not satisfied with that. That's why all these are what really sent kind of a mixed sentiment on Friday. That this one that is kind of lingering. But we believe that as all eyes are on earnings will change the face of the market in this matured economy. That is likely also to bring a new direction if the numbers that they are expecting this market look very good and also beat expectation. Because we saw what the number that were released from big banks last Friday in that market, US market, how it will play out. If that trend is sustained, and we'll see more of the banks, especially the big names, that also going to shape the market as we speak right away. Like I showed you earlier, that the China now economy is going to look at what the figure we're going to look at, despite the uncertainties over US rate weighing on the Asia market, but still all eyes on still this regional central banks what they're going to do to hot rate and start reversing their tightening cycle. For all eyes and all this when the rate start easing, because if we're seeing inflation cooling down, when will they start? And also don't forget the oscillation in oil price has not allow or give kind of a clear direction where inflation is going for these central banks in different domain, and that's why we are seeing the kind of direction. But the good thing is that at the end of the spring meeting, in of World Bank and IMF, I think there was encouragement that central banks to start easing, but most of the central banks they understand their domain, they know when to start doing that. But it's good that also that the World Bank are pushing forward for zero interest rate for borrower for some for people to economy to rebound. If that is encouraged and there's modality, it's also a good way of making funds available, so that this economy that are contracting will start kind of start going back to expansion. And I believe that when there's expansion economy, that is where growth can be thinking of a growth, also sustaining what a growth in other sector, because this is what every investor will want to hear. They want to see expansion in where they are in the economy where they are playing, so that it also reflects on activity. But when there is heavy risk of economy going to recession, and this is going to affect most of the market for that. Once we see the outcome of this, less than 2 weeks now will be entering May to see the outcome of this central banks, and that will also give a clear direction. But actually, as to speak, market is looking southward, and what the better way to play this market, both the matured market and down here in our economy. If you come back to now Nigeria economy, you can see that over the weekend we saw inflation figure hitting about 22.04, which is highest in 18 years. It tells you that there have been tension or kind of pressure, around where funds be going, knowing that liquidity here in our market is very, very low as we speak now. That was going to put pressure on the market, both the fixed income and equity market, as inflation has moved to that 22. Most of the instrument or return or yield in those fixed income market here in Nigeria are already in negative dipping, even though we saw a little kind of inch up in this yields in this market, this fixed income market. But with inflation looking up, the threat towards both fixed income, both equity. But the good thing is that because of the equity market has some sectors that are operating even when inflation is going high, going up, those sectors are still posting positive number because they to their factor in the inflation to their products or their services, and there are any more that will support the world, support their services, support their bottom line at the end of the day. Those companies will post in their positive number that will also support their PR, that will support their price. If that happens, it's for us as investors or traders to start looking at which sector will benefit from even the inflation that they're able to move their cost high and able to match inflation, and which is going to reflect on the numbers we're expecting, especially for the Q1 for the new financial year. We have seen most of the results for 2022, apart from the few first step banks that are yet to release their results. The one like Access Bank and SBN Holding, and while other second tier banks like Fidelity and Sterling were still looking to see their results. Last week, Friday, after market as well, we saw result of GT code, which we're going to discuss in this class later before we go to live class. These are the things that I believe that will shape the market this time. Because of this high inflation, I see pressure in the market, but I believe that equity market remain a space to see and to take advantage of the market. For those that really understand how to play this time, don't be bothered that there's a bear market, because I tell you since month of March around 17 or 15, we've seen the market on a correction, which the chart has even tell us that market is already on a decline or a markdown, whatever you call it. But despite this markdown, there are still opportunities in the market. How can you carry this opportunity and take advantage of the market? But for those that really want to carry money, you must play with knowledge at this time. When the market is in an uptrend, anybody can comment stock can still move. But when the market is a bear market, it is those that know how to use their technical charts, and also traders that understand the power of volume, resistance, and their support level will know exactly when to drop into a stock. And also when there is other insider information in the form of companies seen where either the executive director, non-executive director, or staff of the company are mopping up, it's also a sign. Which also, these are the things we'll be looking at this time to take advantage of the market, to stay ahead of the market. It is very, very important that market is open for the week, then you have to plan your trade for the week. That's why this class is very, very important for every one of us to as we share ideas here. You go back to your portfolio and look at what the market is. That's why it's already a live market. You see what the market is doing and what you can do immediately from this from where you are. This is the good thing in this live market, so that you exactly know what you are doing in the market. You are not panicking, or you are not just taking it for guessing, because you are seeing the trend and also you are acting in that direction as you speak. That is the way to go. Like I said, those that really able to attend the master class for Q2, who was held on the first of April, I will tell you that despite the current market situation, we are seeing that two of the major stock giving have given almost one about 36, 37%, another one almost 40, 46, 43. While those in buy and sell signal also have gotten also a stock that giving them, for those that are in the signal group also, apart from the master class, that also got like 55% in some of the stock that are taking position. It says that you need to understand how to play around this market. It is not just enter the market. The market needs continuous education, continuous knowledge, so that you invest with confidence. I tell you that the only school that I know that you don't graduate is school of investment. A lot of people say you don't graduate the school of marriage, also investment. Those billionaires who are seen as a few billionaires, those billionaires, they are still upping their game, learning the trend of the market, changing the face of the market, so that they can take out. If you say you know market and you want to sit down, you are deceiving yourself. Once you continue to gather knowledge from left and right, you want to share the one you know, so that you know whether what you are using is also working for you. You sit on your results and also want to build on it. These are the things we expect investors to be doing at this time. Because not the time to fold your arm and be complaining. No, it's the time for you to take advantage of what the market is doing. And I believe that once you're able to get it right, you are good to go. Because I believe that the market at this point is creating opportunity for those that has that smart investment strategy, and design investor that know what to do to taking a pullback in some prices and also taking advantage of it. It is for me, this is not the time to complain about the market at all, but rather to take advantage of it. Yes, as I said, liquidity in the market is still very, very low, and being a transition period of incoming government, a lot of people are still on the fence. But you that understand the market, you take advantage of the certainty that we are seeing now to kind of grow your wealth. Yes, there are not, there are few sectors that they can take advantage of. How can you position in that sector for the year, for the quarter, and also looking forward? Because once the new government come on board, what they're going to say in the next 100 days in office, what their policy direction, what are they going to work, are the people that are going to make up their team. These are all things that will shape the market. Once they get it right, I'll tell you, usher Nigeria into a progressive economy that will attract more inflow of funds gradually back to the market. And those coming to meet you in those stocks and those them and in those positions, it will be very nice for you and I to also be smiling to the bank. This is how to also invest at this moment. For me, there is no cause for alarm at all, because I believe that investors in every climate has what is guiding them, because we are investing in different regions on different markets. You know exactly what you are seeing and what you are looking at to take your word, to take investment decision. That's why all eyes on this economic data that are coming across the globe and also locally here was, like I said earlier, I've seen the future figure for March. These are the things that also all eyes will be on what on GDP for the first quarter of the year. We know effect that happen has been to look like, but when it comes, it becomes clearer for you to know where you should be looking at. These are the things I believe that will guide the market. Yes, before we go to the to the live market to see, I want to quickly look at some few results that hit the market, during the week, or during toward the close of the week. One of them that is very important I want to look at is the result that came from UCAP. I believe we have seen that of UBA, the one that came from UCAP, and GT code, one that came from Living Trust Market Insurance, Agency Alliance Insurance. These are the ones that also saw the champion beauty result that came full year. These are full year results apart from UCAP and the Living Trust mortgage that are Q1 number. We already discussed UBA in this platform last week. Then today we are looking at UCAP and GT code. The time for me to look at also Living Trust and others that also were released. But for me, the number that came from UCAP is a pointer to where they are going, and also the nature of their work, of their service, and also what it brings for us on board to see. This company, we saw that their gross earnings for the period were up from around 44.21 billion to 5.34. That's about 26 to 26% up in the green, which is good. PAT also maintained an uptrend, despite that it was still marginal by 5.6 or 6%, from 2.31 to 2.44, good for this company. And also the EPS also moved from 38 kobo to 41 kobo. We also saw that the profit margin, despite slowing down to 45.69 from 54.8, is also very impressive for me. And I said the cash flow also improved to around 135.62 billion, which is good, against 109.6 billion in 2022. This is a pointer to where UCAP is going for the current financial year. And don't forget, I said it together in this class, that with the company trying to support this cash flow by going into microfinance banking service, that also provide more capital for them to play. They understand the market. We have this avenue also help them to raise funds to play. And for me, it's a good one for UCAP. These are one for those that are looking for future. I think there is potential in this stock as we speak. Here, the next one here, look at the one that came from GT code. GT code result was delayed, and the good thing is that as the result hit the market, from the result we have seen that GT code have taken care of what the debt sovereign problem in Ghana were factoring into their result, and that is why that the bottom line of GT code was slightly in red. slightly in red. But it's good that they've taken a good cover by making provision for that bad loan and all. So, and when it comes to the future, become a kind of a plus for their work, for their bottom line, to become an earnings. For me, it's a good one. But investors will now know that on this number, the UTCO is starting on a clean slate for the current financial year. But the good news there that they're able to each kind of increase their dividend part, with 10 couple, just like what the Zenith Bank did, just to show that this company every year they are growing their dividend, and that makes the banking sector the most consistent in dividend payment. And also, if you look at their price and what they pay, see that the yield in this sector is high. These are the things you'll be looking at. And also, I'll tell you, like what the CBA governor have said in during at the sideline at spring meeting World Bank. He said that yes, they won't take away their eyes from war for inflation. If that is what we know, the implication of that, now that we're seeing inflation eating up again to 22, it tells you that because the way they are hiking rate, if possible, our interest rate might go back to what high again to around and inch up further to around 18.5. But let's see what they want to do. But if the rate hike we've seen from May, is almost getting to 1 year now, have not seen impact on inflation. I think the time for them to retain. But I believe that they will still maintain that rate. But that also they are kind of stifling what the economy on expense of the bank. And see the bank results are doing better because of what is happening. Put at the detriment of the economy. I think it's the time for them to work to rethink and see how they can manage this inflation very well. But if you look at the gross earning for GTB, moved from 447.81 billion to 539.23 billion. That is up by what? By 20% in the grid. While profit after tax was saw that this was translated to a slide down of PAT to 169.17 against 174.84, down by negative 3.24. This for me, we understand why it is, and if this is the weight is going coming in, for me, we are not surprised, and that we should not send any panic to people in GTCO, but rather take your dividend. We are seeing that also the profit margin stood at 31.4% against 39. Fine, and the earning per share slide down to 5 naira 95 kobo against 6 naira 14 kobo. The good thing that we can see that the dividend moved from 2 naira 70 kobo they paid the previous year to 2 naira 80 kobo. And if you look at the cash flow for GTCO, it remains also positive. And I'll tell you that whenever you see that the banking sector, the banking company, is on having a negative cash flow, operating cash flow, doesn't matter there is issue, but because the nature of their business of lending, they have lent, they also expect what income to come. And when they are interest come and also some of them pay upfront, you see it also netting off the negative. For me, there's no cause for alarm when you see a negative banking or financial service operating cash flow in the red. Yes, we discussed UBA here already. The one I want to look at and time permit us others is the living trust mortgage. You can see that this mortgage companies in Nigeria are becoming more active, and also their corporate governance has improved. We saw Infinity Trust Bank, that one has been consistent. We're seeing also Living Trust joining. We saw also the ABB full year result that came from the same mortgage bank. That means this company can give you insight. When you are seeing a result of any company, or their scorecard can guide you on what to do. Right, for those that are fundamental guide, but we traders, technical, we know that the fundamental will also be reflected on the emotion or the attitude or psychology or the sentiment of the people. But they are also good for you to look at. That's why a successful investor or trader must have to combine the technical and the fundamental any given time to stay ahead of the market. Because of our time, I will just look at briefly on the first quarter of Living Trust Mark. This is a missed number, but make it snappy so that we can look at our chart because of our time and quickly continue what is happening in the market. We need to also go to the live market. Sorry for keeping you. Yes, for the Living Trust mortgage, Q1 number came, the top line was good, above inflation. If I say it was up by 26%, moving from 502.66 million to 633.85 million for the first quarter of the year. It's a good start. But if you look at the PAT also saw a kind of a decline of 18% down. And if you go and check, you can see that there's also high interest, high what's going inflation. I'll put it now. That also cost of operation that we saw on the result that really affected bottom line. But let's see, watch and see what will happen going to the future. But the EPS stood at 4 kobo against 5 kobo in 2022 at this the same period, and the profit margin stood at 31.81 and against 40.22 in terms of profit margin. The good thing is that the cash flow of this company has improved tremendously from almost a negative 295.16 million to 1.25 billion. I say a mortgage bank, you understand how the nature of the operation will also look like. For me, all the service company is where we also be looking at to see how we can take advantage of these numbers we are seeing in this company. Yes, we are coming back to look at the chart. Then before we look at the chart, we will see what is the market doing now. I said the market has continued the downtrend we have seen for since March 15 or 17. Today, we are seeing that market is also losing about 781.98, with about 1.5 or 1.4 in the red. This tells you that the market is doing 51,112.08. It's a market that can see that the market is on the downtrend. And if you look at the market bread remains also negative. We are seeing about 15 losers against just 9 or 10 gainers as we speak. And if you look at the top losers now, that is what market is you say we can see that champion brewery result that came was also okay, but you can see that the market, because of no dividend that accompanied champion brewery, that's why the impressive number. We are seeing that the stock is within the loser chart with almost 9.5 as we speak now, to trade at 44, followed by MTN. MTN has lost almost the same, it has 6 or 8% I can see, to trade around 224 naira as we speak. Then followed by Africa Prudential. We know that this one was adjusted for dividend today. Also, Champs also down, and the Wima Bank. Yes, before I forget, already we know that 4 companies have been adjusted for dividend today. Infinity Trust, Mortgage, and also Africa Prudential, UBA, and what, and the Zenith Bank. So have been adjusted today for what, for dividend. Then if you look at the gainers chart, the top, you can look at the K Hotel leading, followed by Transcorp. Transcorp has almost trading around the 185 kobo, another almost 9.9% up, followed by Chi Limited around the 62 kobo. This one is up almost also 8% in the green. You can see Massad also in that direction, and that's the NACO also around the 11 naira 10 kobo already for NACO. You can see that these are the stocks that are still on the move as we speak. And I will not surprise seeing NACO and the Transcorp in that direction, Massad and also Chi. I believe that investors are looking at where they expect to do positive information inside that dealing, that has been known, and also transaction, and also the value these companies are presenting and what is better. I tell you that in any market, whatever you are trading, once you see a company that is having what and earnings is rising, price is rising, volume is rising, positive sentiment or technical, that is where you should be. Yes, straight toward. Yes, before I go to the chart now, let's look at the volume. Look at the volume in terms of activities. Transcorp is leading with almost 40.8 million shares, followed by Fidelity, 13.2 million shares. Zenith Bank, after Magna, was 7.4 million shares traded. Dahis Bank, 5.7 million shares, and UBA, 4.8 million shares as we speak. Yes, back to the chart. This is the chart already. You can see that market has a form of trading last week. After pulling back because of pullback sell-off in Ether. This one was seen that also sell-off was seen in or profit taking in Ether in MTN. Also further pull the market down, and also coupled with the markdown in blue chip stocks like UBA, Zenith Bank, Africa Prudential. This also contributed toward the index looking down this morning. You can see it here as reflected on the chart. These are the things that is happening now. But quickly, because of what let's call 2 or 3 of our indicators to look at what the market is doing, what is the trend, and where the market is going from here. Let's look at we don't do anything without looking at our money flow. It's very, very important. Money flow, our T line, and quickly look at what is happening with our MACD. These are the 3 ones we're going to use now this morning before we complete the class for today. Yes, quickly change our T line to what? To 8. To 8. Yeah. For For traders like me and you can see that the index action is still below what? Below the T line. And I tell you, far the more the index action is far from T line, the more it will pull it back to come back and pick up. The more it's also far from above the T line going up, the more it's also trying to come back. That means the T line is like how would I put it now? A reference point that what they want to look at whenever there is a kind of a divergence between the index and the T line, there's only way of trying to connect back again. But if you look at the volume this morning, yes, you can see that volume is not much. You can see as we speak now. But money flow maintain around the same 32 or something, which is relatively a bit stable, but not seeing coming down. That's why the market dynamics fund are still entering some stocks that also investors are seeing value as we speak. That's why we are seeing this. For this, for a day chart, let's look at 1 hour chart for the index to confirm. On the 1 hour chart, you can see that there's already an extension here that is trading below the T line as well of what. And money flow is trying to look up here, and the market is already confirming that the bearish trend is also going on in the market on the 1 hour chart. You can see what we are seeing. Once the blue one cross the red one down, that will confirm the bearish situation again on the 1 hour chart. But because of our time, we look at few stocks before we round up the class on the chart. And those few stocks want to see stock like see what is happening in Mansard as we speak now. What is also happening in NACO? How far will NACO go? Profit taking has been in that stock. How far will it go from profit taking? The markdown GTP, the markdown of Zenith Bank and UB, how far will they rebound? But let's quickly, because of our time, let's look at what is NACO doing this morning. It's good that we look at it. This is our live class. What is the strength of NACO? How far will it go? NACO, I said it has touched 11 naira, and that is what it is. This is a 1 hour chart. You can see that in the last 2 hours, where it has been now, try to let's say the last 4 hours, can see the movement. The market opened by 10, and this almost getting to what, right in the last three hours. You can see that the trend maintained up, volume is there, money flow is almost around 80, and you can see that MACD has confirmed a bullish trend, serious one for the stock on a 1 hour chart. Which let's look at the day chart for on the day chart. You can see where it's going. It's already headed toward to 11:30 as we speak. On the day chart, you can see what I'm seeing here. You can see how stock has been trending up since you can see that when the company release the impressive earnings, it has the way of also getting market attention. You can see it what is in the stock. But in this case, don't be greedy. Always stay with your word, with your plans. Once you meet your target, your profit target, you nothing stop you from taking your profit target. That is how to manage your risk too. Because the same stock that take you up, if you're not taking, market can take it back and turn into red. That means when you see the momentum behind the market, and I can see that you can see a strong momentum on the stock for investors that are here or traders. But for those that are in their target, nothing stop you from taking your profit from this stock as we speak. This is the trend now as market is looking up for what for NACO. Yes, quickly look at the transport. Quickly look at transport. So, because of our time, quickly look at transport. Transport will be the last for today. We'll continue other ones that transport. Also, you can see the transport position now. What are you saying there? You can see that on the D chart where the stock is going, has already broken out this strong resistance level of what of 1 naira 74 kobo. Has broken out. That means a new trend we are seeing in transport, and this is a new trend in recent time. That means after here, the possibility of this stock crossing around 22 naira 20 kobo 250 is there. But you as an investor, you know your goal while you are in this stock. Once you achieve your target, nothing stop you for taking your profit. The money flow is very strong. You can see around 86, 83, sorry, around 83, and MACD has confirmed a strong momentum on the stock. That's why the MACD is a lag indicator. You can see that it has confirmed that the stock has become bullish on MACD, which is also good for investors. On this note, let's look at UBA. Sorry, because of my time, before they yank me up on the way I'm going, but let's look at what UBA is doing. UBA with an impressive number. What is the position of UBA? And like UBA has been marked down this morning, considered to resist decline. You can see this candlestick we're seeing here is a good formation of stock that don't want to go down, and also money flow remain a bit up above 50 50 points, which is around 58 for it's a good one. But MACD is telling us that stock is also looking down. Look at your MACD, this is token that is here. That's why as a trader, you must look at all this at all times to guide you. On a day chart for UVA, it has confirmed already a really strong, a very trend for me, and also money flow is below what? Below 50. On this note, I say thank you for your time. See you tomorrow and enjoy the rest of your journey day. Bye.